Aloha, it's Julie Ziemelis. Sorry, there you go. Oh, I'm gonna hold it like this. Hey, if you are joining us after you just seen Travis give the mortgage update, you will see that I have now been joined by Lance Owens with LUVA Real Estate. And if you didn't see that, then this is Travis Green with Guild Mortgage. And I'm Julie Ziemelis with Bill Broker, and we are doing kind of like an after the election experience with real estate and mortgage. With Lance being the expert in West Hawaii numbers, stats, trends, issues, and our buddy Travis here understanding the dynamics that's are all around the election and what's going on with the economy. This is going to be a great discussion. So let's have. I'm gonna pass this to Lance because he's got a really pointy question that he has of Travis.
Oh God.
I'm just going to get right to the point here, okay? The election's over. What is happening with the interest rates? Where are they going?
So they have since the election happened, they have just gone up. That is basically all they have done. We had a quarter point rate cut a couple days after the election. They still went up, so for the time being, the direction is higher.
It's higher. Okay. And your opinion on that? And let me just add another question to that. You know that little kind of tit-tat thing that they were having about the Fed guy leaving if Trump asks him,
Yes.
and everybody's trying to blow that into something. And
Yes.
was he even planning on asking him to leave? Do you know what that was about?
Yeah. So for context for our viewers, Jerome Powell is the chairman of the Federal Reserve, and he was appointed by President Trump in 2017. And so Fed chairs are appointed to a 10-year term, and it's supposed to be an apolitical job, and so that they can just like focus on their work, almost like a judge or something, and there's no re-election or anything like that. And they're not supposed to be able to be fired.
I don't like what you've done.
It's not like at will.
You're out of here.
I think maybe for cause or impeachment.
Make the economy better for me.
Or they could be impeached or something, but it's so that they're not susceptible to political pressure. That's the idea. So he was recently asked, because the reason he was asked this is because Donald Trump and some of his acolytes have been grumbling quite a bit that Jerome Powell has not been or should have been cutting rates already, or is responsible for inflation, or any number of things. And so Jerome Powell speaks to the press after the Fed decision. And so in this case, it was 2 days after the election. It was clear that Trump had won. And a reporter said, if Donald Trump asks you to resign, will you? And he just said, no. And she said, do you want to elaborate on that? And he said, no. And then he just moved on, which was, like, what else are you going to do? Like, that's.
Well, I was wondering where that question even came from. You know, why? I didn't hear any.
Well,
problem.
I guess the context was some members of the Trump transition team have been speaking to the press and saying, Jerome Powell should resign. We need to get our own guy in there.
Oh, Lord. But it wasn't.
Did they not know that Trump put him in there? Is that?
I mean, Trump also appointed the FBI director, Chris Wray, and he's going to fire him for sure.
There's going to be some firings.
So.
There's also going to be some never going to get on the cabinet positions too, I hope. So So with that, maybe this is a little quick. Our buddy Jerome, he is also looking at the economic indicators as we're heading into 2025. Mm-hmm. And you had said, kind of, sort of, along the way, that we were looking for rosier days ahead in 2025.
That had been the direction.
And now what are you thinking about now?
So the Federal Reserve, so Powell spoke today, actually, and he said basically that the Fed is not on some preset path. They haven't charted some preset course that means that they're going to definitely do a certain number of cuts over a certain period of time. They've cut 0.75% this year between two meetings. The bond market expects them to cut again in December. So a total of 100 basis points or 1% to the Fed funds rate by the end of the year, which is a big deal, right? Because that's a big deal. And so he believes that policy is restrictive, meaning it's not encouraging growth or inflation right now. But inflation is not quite at the target yet, right? Yeah. And so they don't want it to settle. I think CPI just came in, the consumer price index just came in at like 2.6% year over year or something, which is dramatically down from its peak over 9%, but they don't want it to anchor above 2%.
Yeah,
And-
they're always trying to keep it at that point, right?
Yep. That's the belief at the Federal Reserve is that 2% is the kind of the natural rate of inflation, if that's a thing.
Okay. Even though housing usually is 4%.
Mm-hmm.
How's that?
Yeah, overall inflation 2%. Overall
Okay.
inflation.
Okay.
Housing appreciation is they're almost like agnostic to it. Like they don't really speak to it and like what it does because it's kind of an asset class.
Oh, okay.
This is making me thirsty.
Okay, so you guys,
Yeah, me too.
wait. Just because the rates are not going to go down to 5%, we deserve to
Well,
drink.
not
So-
today.
Yeah, not today. So this is our little Ola Brew Ma'a
Commercial time.
commercial. Here we go. If you guys have been with us long enough, we're adding little
Yeah.
Travis here to the mix.
Yeah.
I love Ola Brew.
Right?
Yeah.
Okay. And we have to pull Eric Ziemelis in here as our cameraman. There we go. Yeah. If you're not drinking now, you will be by June.
Oh boy.
So, in terms of the housing market,
Yes.
okay, so this is where Lance is going to throw in here because he has some interesting information. You probably well. Okay, so the two things I think about, one is that there was this hesitation of not wanting to buy until after the election. We can't see those numbers for another
Yeah, we're not gonna
couple of weeks, but
Really for a couple of months.
months.
Well, this.
Oh, because of the 45-day.
Yeah,
Okay,
closing
yeah.
things like that. The people don't just like wake up the next day and start buying the day after. It takes them a week to get over the hangover and kind of get things going and rolling. I think so.
Okay.
It'll be 2 months, and we'll be able to see closings and what do we got. So that's going to be November, December. By January, I think we'll see what's happening with the housing.
Okay, because two things. I was doing a East Y update with Amber yesterday, and she was noticing that last year the housing market was pretty slow, and it was because it was 8% interest rates, right? And then there seemed to be kind of a slowdown and a drop in pricing as people were holding on, waiting for the election results. So what's happening in West Y for this?
So, I think that's, I did a report on this about a month ago. I think we had it posted on the page. And typically the housing cycle for 20 years now has always slowed during the presidential race. It doesn't matter. And every time when it's ended, when it's over with, no matter if it was the incumbent or somebody new, whatever the trend was, if it was on its way up, it just took a little step here while the election happened, it kept going up. If it was on its way down, it took a little step landing here and went down. So I think we're just going to see more of what we've seen. I don't really think that this is going to, people are going to, they've already woken up and said, okay, it is what it is. I got 4 years of doing this, and let's keep doing what we're doing. So some people are very happy, some people are very sad, and it's going to move. The economy's going to start moving again, though.
Okay.
So I see it's just moving along at the pace we were.
But even sad people buy and sell homes.
Yeah,
Right. So that's the thing. It's like
Sad people, happy people.
people are not going to
keep
just
saying-
opt out of the economy and be like, I'm not transacting anymore.
Right. Well, although some people say, yeah, I'm selling my house and moving to Portugal. But it'd be interesting if you're watching this, if you want to pop some stuff in the comments, either on live over on Facebook or later on at YouTube. What are you guys doing? What are you thinking? It'd be interesting to read your comments on, are you still going to buy and sell? Were you holding on to see what the election results happen and now deciding that maybe you're going to change your mind about what you were going to do based on that? It'd be interesting to figure it out because I'm sure the inquiring minds would like to know what the public is going to do next.
I remember on that report when I was doing my homework on it, one of the things that I found was that people, live with their families over the political disagreements and things like that, but 2% of the people are going to move because of their political neighbor. So it'll be interesting, there'll be some people in the next few months. So if you don't like what happened, I can help you. Julie can help you. Eric can help you.
If you disagree with the yard signs in your area, call one of these guys.
Yeah, if you just know that guy with that one sign in his front yard is going to be gloating for the next 4 years and you're ready to sell, we're here for you.
There you go. There you go. And
Commercial.
again, however you lean, the fact remains that Harris did win in Hawaii.
Yeah. How did that work out, though?
I know. It didn't make
Sorry,
any difference nationally. But we do have, obviously everyone knows that we swing pretty heavily Democrat here.
Yeah.
So it's
been forever blue, I think.
yeah, and Hawaii County.
I don't think it's ever been red.
No, I don't think so. Even when Linda Lingle was governor, she was Republican. It still was leaning,
Yeah.
pretty to the left. But the 60% of the county of Hawaii voted for Harris. We were like the highest level of any county in America
Wow.
who voted
Wow.
for Harris.
More than Oahu did?
Yeah, it was like our county was like, because Oahu has a lot of, they have like, a lot of, Trump supporters over there too. So I think that when they did the numbers and they showed how big and how far apart it was, 62% of people in Hawaii County voted for Harris. And
That's interesting.
And nationally it was like, 47-52 or something, right? So it was like ours was like an overwhelming majority.
So, I'm the state chair of the Realtor Political Action Committee. We call it RPAC. I always just say RPAC, but that's what it stands for. And we interviewed 71 candidates. Most of them are incumbents coming back. And it seems like only 5 of them were Republican, I think. It was just amazing how many of them.
Wow.
And no matter which way you go, it was just interesting to see that little of a number. So I would have thought that they would have been higher on Oahu. But thank you for the information.
There you go. Well, 2 Republicans.
I learned something today.
2 Republicans did win
Yeah.
the state
Yeah.
election. So there you go. There you go. Maybe we'll get more of like a balanced market.
Yeah.
Okay.
Interesting thing too on that. I know since I mentioned RPAC, one of the things that they do is we support candidates that are for housing, and that's all. We don't look at their other things that whatever their beliefs are and platforms are. If they protect property rights and if they are helping with housing, we support them. So interestingly, it went right down the middle. We had a 98% success rate, and it went right down the middle between blue and red on the candidates that we supported. And we do not ever support a presidential
You never
candidate.
endorse a presidential.
Yeah,
That's too
don't support, don't endorse, stay away from that one 100%. So
There you go. In fact, in most counties in America, housing is almost one of the number 1 issues.
Yeah.
And that's what
Yeah.
it's
gotta be.
it's got to be. It's affecting the whole country, and I think that's when people they said the millennials might have been the ones that switched the whole election because they're the ones that are having the most angst over not being able to afford a home.
One of the big things that we were just talking about, I just got back from the National Association of Realtors convention in Boston, and we were talking about that, and the biggest thing is over $90,000 of a new home is in government regulations.
Wow.
So before shovels hit the dirt, before it's all the regulations that they have to deal with is about 90, I think it was 92,000. And in Hawaii, they think that it's a little over 200,000. So we will be at Washington, D.C. advocating to get rid of so many of these. They've come up with some great rules and regulations and things like that, but sometimes you just go too far.
Yeah.
And we need to back off on some things.
It needs to be like
Yeah.
sensible and not lose
Yeah.
sight of the actual mission of what it's there to do, right?
Yeah, exactly.
It's kind of like how there's high-speed rail all over freaking Spain, but it's $1 billion every 100 feet to make a subway in the United States. It's just like, okay.
Well, and also it's the transportation thing. People will not get out of their cars.
Right.
They just won't. And they did spend $1 billion on the trail system the rail system in Oahu, which we're all paying for. I don't know if you guys know this, but if you live in the state, you're all paying for a trolley system you'll never use unless you go to Waikiki. But I
was there
digress.
today, and it did not. I was on Oahu today, and it did not occur to me to even.
Did you try the trolley?
No.
I will not
No.
go on that rail.
I forgot that it existed.
Yeah. Great, because you're paying for it. So okay, back to the thing. Eric, is anybody watching that wants to throw in here?
Nothing we got so far. Cheryl says, hi, 365 gang.
Hello, Cheryl.
And
How's it?
Sheila is there.
Hi, Sheila.
And Cheryl said something to your comment about something except for us, but that was some time along, a little while back, so it was something you were talking about.
Oh,
So no comments moving forward.
okay. But go ahead and post those comments if you feel like it. But in terms of the future, again, do you want to prognosticate?
I do think that rates will probably not continue to climb next year.
That's a good attitude.
I'm gonna go with you on that, though. Yeah,
I think that
Drink to that.
I think that they will. I think right now it's in a kind of like wait and see. The stock market and the bond market are both reacting to now cabinet picks are coming out, right? Secretary of State and Secretary of Defense and all this stuff, and I think Treasury Secretary is going to be a big one, and then who's going to serve on the White House Economic Advisory or Council. So and then the other thing is like we're going to get new appointments at FHFA, which is the Federal Housing and Finance Authority, and that's the governmental body that oversees Fannie Mae and Freddie Mac, and a new HUD Secretary, Housing and Urban Development, and so that has to do with FHA and really like government mortgages, VA, USDA, things like that. So that'll be interesting to see, but who knows? Like who knows how much of this comes to pass? If there's going to be across the board, 30-40% tariffs on everything coming into the country, and if there's even more tax cuts and no commensurate makeup anywhere else in the budget. So the bond market is just reacting right now to just like here's what you said on the campaign trail, kind of hedging, I think, and it's in a defensive place. That's my opinion on what's happening. And so as things come to light and the market kind of digests and rationalizes what's going on, I imagine that rates will probably continue their trek back lower, hopefully back towards 6%.
Yeah, 6%. Okay, not 5.5.
I don't know. We might have a calamity or something happen.
Okay.
I don't know. Who knows?
So, and I think you're right too. I just got back from Boston again, and we were with Lawrence Yun, who is the economic guy for the National Association of Realtors. I try not to use those initials. So, and he's kind of going along the same lines. It's kind of early to see the tariffs may change everything.
Right.
It'll be interesting. You see a lot of movement, I think, with people already making the changes. So maybe just the threat of it is going to be enough, and that will just move things in the right direction for getting things back in America, and without having to do the tariffs. And still, because there's still, we're a worldwide economy, right? I mean, we can't stop that. So it'll be interesting. So I agree. I think you're going to be, and I think the housing's going to go along at a fairly level rate. I think no big changes this year.
Right.
Really?
This coming year.
Okay.
Yeah.
But like, kind of just keep it nice and steady.
Yeah, nice and steady. We're going to see a little bit of that in the numbers when we talk in a minute. But
Okay.
yeah.
Okay. So we're getting the wrap it up from Eric Ziemelis, that we do sometimes. So what we're going to do now is actually we're going to jump into the West Hawaii Association. The West Hawaii real estate update, but we're going to do that with Lance because Travis has to peel out of here with his beer.
Yeah, I gotta go to a parent-teacher conference actually.
So thank you for joining us.
You need another one of those.
Yeah. And we'll have Travis is going to speak again next Thursday on the monthly mortgage update along with the island-wide update. So if you guys want to see that, it's going to be next Thursday. There is a Zoom link that goes with that. And if you want to see it live, let me know. I'll get you a Zoom link. Otherwise, it'll be over on the YouTube land. But again, drop those comments in and tell us what you're feeling about the economy. If you're planning on buying, are you holding off? Are you going to make it happen? And then we'll address that at the 2TT on Thursday to tell people a little bit about what the public is thinking. So join us. And again, thank you. And,
Yeah, my pleasure.
Thank you. It's good to hang out with you.
Yeah, this
today.
was fun.
Thanks. Yep. See you guys.
Aloha.
Thanks, guys.